Good morning, guys, and welcome to your market report for this Friday. Friday, March 8th, 2019. It's not looking good. It's looking gloomy this morning. Let's get started. I'll tell you what, we got real big problems in the world. Let's get started. Let's open up the charts right here, and let's take a look at what's going on. First off, I want you to take a look at this. This is called the Smoot-Hawley Tariff Act of 1930. Now, do you remember that the Great Depression occurred back in that time frame? This is part of what caused the Great Depression. It was the Smoot-Hawley Tariff Act, and it was a tariff act of 1930, commonly known as the Smoot-Hawley Tariff Act. It was an act implemented by protectionist trade policies, sponsored by Senator Reed Smoot, and represented by Willis C. Hawley. It was signed into law on June 17, 1930. The act raised U.S. tariffs on over 20,000 imported goods. Okay? Now, what do we got now? Trump tariff. Trump tariffs are a series of tariffs imposed during presidency of Donald Trump, and so on. Raised tariffs on thousands of goods. Very similar. Very similar to the Smoot-Hawley Tariff Act. What was the result of the Smoot-Hawley Tariff Act? Let's take a look here. The Great Depression. The Great Depression was a severe worldwide economic downturn in the 1930s. The Great Depression was severe worldwide economic depression that took place mostly in the 1930s, beginning in the United States. Timing of the Great Depression was varied across nations and countries. Started in 1929. Pre-market data this morning. In the pre-markets, the Dow is down. Okay, it's down 131 points. Tell you what I think's going on. We had a market downturn not long ago. Scared a lot of people. Then we had this Goldilocks rally. Took the pressure off. This morning, I see them running heavily. The investors running, scared this morning. They're buying in heavily to what they perceive as safe haven assets. And I use the word perceive. U.S. Treasuries, U.S. dollar, running heavily into the dollar and treasuries. They've rammed the dollar up a whole percentage point, basically. That's a lot. To move the dollar that much is moving the dollar a lot. That's a lot of investment. They've rammed the U.S. 10-year down massively. We're going to take a look at that. By buying in to U.S. Treasuries. They're scared right now. Investors are really scared. But I consider them to be running to the wrong places. They're just starting to run to gold just a little bit this morning. Just a little bit. They're nibbling at it. But they're not running into cryptocurrencies at all. Okay? So that's where investors are going this morning. And they're scared. They're really scared. Let's take a look now at the Asian markets. What we're seeing here is, look at this big red dot in the Shanghai Composite. The Shanghai Composites fell 4.4%. That's a big drop in the Shanghai. All of the markets are in the red. We can see all the way around the world the markets are in the red right now, except for one exception, India. Okay, let's take a look. We're going to move down here and take a look. I'm going to close the chart in so you guys can see what's going on. We see the Shanghai Composite down 4.4%. The Hang Seng is down 1.91%. We see Mumbai, India, is the only one that's up. They're only up marginally, 0.24%. The Nikkei is down 2.1%. That's the Japanese trade market. Taiwan is down 0.68%. So Taiwan is down the least. Okay, so let's open the charts back up again. And we're going to take a look here. Just give me a second to open the charts back up again. I closed them in so you guys could get a good look there at what's going on in the Asian markets. Silver today. We can see it's up just a fraction. It's up 11 cents. But this is a reaction to the, well, now what they're showing you. What are you seeing here? What are traders actually showing you? They're showing you where they're going to run. Initially where they're going to run. Later, they're going to change the direction they're running in a little bit. Right now, they're running into U.S. Treasuries and the U.S. dollar. At a certain point, when the Fed reacts to this, they're going to change where they're running to. They're not going to be running into Treasuries or the dollar anymore. In fact, they're going to try to all flood out simultaneously. We could be looking at a crash in the bond market coming when that happens. A bond market crash, which would mean yields would spike upwards very rapidly. They could, quite seriously, the U.S. 10-year could go from where it is now at 2.6 some odd percent. It could run up to 10% overnight practically. When traders finally realize they ran to the wrong place. Anyway, this thing could get really ugly, guys. Really ugly, I'm telling you. And what happens in a situation like this, and what happened during the Great Depression is capital flight. Capital starts to move around like you ever seen a pinball machine? You ever seen a ball flying around the pinball machine and it even slaps the glass? It starts moving so fast. That's how fast capital could start moving from one place to another. Them looking for one safe haven asset and then switching over to a different one. The ultimate place where they're going to finally run to, I know where it is already. It's going to be gold. This is where they're going to run in the end. You could see this could get really ugly, really seriously bad, I'm going to tell you. Because what I'm expecting right now is that this downturn in the markets isn't like the last one. This one could start out slower and could be much deeper than the last downturn in the markets. And at a certain point, the Fed's going to react, and I think they're going to react sooner rather than later. It's that Fed reaction that I'm looking for, a real Fed reaction. Not just saying patient. Patient means nothing to me. I'm looking for the real Fed reaction when they actually... Now look, right now, pow, the latest just come in on silver. It just jumps 3 cents. Pow, just like that. See, investors are getting nervous, really nervous this morning about the Asian markets and everything else, okay? Capital's starting to fly around fast. It's causing a nervous market, very nervous market this morning. Okay, let's take a look now at Bitcoin. Bitcoin hasn't really been the recipient of this. 38.82, 38.82 right now. Bitcoin has been heating up though. Take a look here and you can see it's just a steady, slow increase in price. You know, and all of the coins are doing rather well right now. Let's take a look at cryptocurrency market capitalizations. And what we're seeing here this morning is $133 billion, $133.2 billion, I should say. Bitcoin dominance 51.7%. And we're seeing a slow but steady increase in most of these coins. I know the numbers are a little bit in the red right now on some of the altcoins, but you have to understand something, that these are only small fluctuations downwards. Overall, the price is up. Like Litecoin's 56.52 this morning. It's only down 0.24%, which is practically nothing. But it could turn up later today. Let's take a look now at Sweet Lake crude oil. Now, this is a big number. Sweet Lake crude oil is putting in $1.39 down, 2.45% is big numbers down in price, $55.27. So right now, crude oil is feeling the deflationary effect of the markets actually starting to deflate. We're seeing things deflate. We're seeing not just the stock markets. We're seeing all real estate all around the world starting to turn downward. This is very ominous. Very ominous. Take a look at the bond market right now. We're seeing a downward turn in all of the bonds. This means investors are running into these bonds. Look at the bond yields. Look how low they are. U.S. 10-year, 2.63%. It was 2.7 something percent. It's dropped a lot, like 10 basis points on the U.S. 10-year this morning. This means they're buying heavy into these bonds. Investors, they think short term. They think short-term profits. They all run in, and what they do is they manifest those short-term profits because they all run into a certain area really fast. So they manifest the short-term gains that they're looking for. So look, right now, 2.63% on the U.S. 10-year. They've dropped it. It's almost like a large version of a pump and dump, you know. But that's what they're doing. They're running into these bonds, and look how they're dropping the yields on them. All the way across the board, bond yields are dropping today. Investors are running in. Let's take a look now at the dollar. Look, it was 96 there last week, 97.39. Now, right now, specifically this morning, a few of them are running out of the dollar. You know, they're scared. They don't know where to go right now. Capital doesn't know where to go. Quite seriously. Any liquidity that's left in the system after the Fed's been drawing $50 billion a month out for this long period of time, that leftover liquidity doesn't know where to go. And so now this is what we're seeing. I'm telling you, this is a very, very nervous market right now. The Dow Jones hasn't opened up yet, but let's take a look at where's my pre-market. Here it is right here. The Dow hasn't opened up yet, but we got 138 points down on the Dow futures. The Dow futures, that 130 points down could turn into something really, really large this afternoon on the real numbers when the market really opens up. This could be a Black Friday today. Quite seriously, guys. This could be a Black Friday. Now, I'm waiting for the markets to open up. The crisis is beginning. It's taken a long time to get here, but I think, my personal opinion, the crisis is starting. It's just starting. It's going to start kind of slow. It looks like it's going to start kind of slow. And as it progresses, one domino after another is going to fall. And what it's going to lead to in the end is a crisis like this is going to be bad. Bad. I think in the end it's going to be so bad that they're not going to be able to call it a recession. They're going to have to use the depression word. And the media even the mainstream media will have to admit we're in a depression. In the end, this thing's going to be so bad. Anyway, listen, stay tuned, guys. I'm going to keep you up to date on the latest. Bye-bye for now.